Distribution of a capital asset on dissolution of a firm. Section 45, subsection 4. Again, as usual, let's first understand what does this mean. Let us say there is a firm, okay, which has 3 partners. Okay, the business did not go well. The firm decided to dissolve itself. Right, dissolve means comes to an end. And what it did was that the assets which it was owning, these were given to various partners. Right? In this case, the firm comes to an end and there is a transfer of these assets. Right? So such a transfer is liable to capital gains tax, and the treatment is as we are going to see now. Gains arising from. So let's say when the transfer was made, the value at which this transfer was done is higher than the cost to the firm. How we compute value is something which is written here. We'll see it subsequently. So gains arising from distribution of a capital asset. Again, the asset which should be distributed should be capital assets. If you are giving money, that is not a capital asset, and therefore it's not liable to capital gains tax in the hands of the firm. But when you distribute capital asset on the dissolution or otherwise of a firm, okay, so if let's say for example there's a dissolution of a firm or otherwise, now this otherwise is not going to include retirement. The word otherwise shall not cover retirement of a partner. So if let's say for example a partner retires and the firm gives some asset to the partner, that case is not covered out here, right? Dissolution or otherwise of a firm or other association of person, which is AOP, or body of individual, which is BOI, not being a company or a cooperative society. So whenever a dissolution happens for either of these parties, which is a firm, AOP, or a BOI, and not in case of dissolution of a company or cooperative society, when the firm transfers any asset to the partner, any gains arising to the firm shall be chargeable to tax as income of the previous year in which the transfer takes place. So whenever is the transfer happens in that year, if there are any gains, that will be charged to capital gains tax. And what will be the sale consideration? I mean, if you're transferring an asset, right, there is obviously a cost of acquisition of that asset to the firm. But what is the sale consideration? To compute the capital gain from sale consideration, we need to reduce the cost of acquisition. The sale consideration will be the fair market value of the asset on the date of transfer. So if you're transferring it on, let's say, 15th September 2012, the value of the asset on this date shall be treated as the full value of the consideration. Right? So basically, let's say if I were to give you an example, let's say a firm transferred land to its partner on dissolution. Fair market value is 10 lakh and indexed cost of acquisition is equal to 2 lakh. Right? The capital gains will be how much? Capital gains will be 10 lakh minus 2 lakh. If you are given two values, one on the date of transfer and the second on, let's say, the date of dissolution deed. Date of dissolution deed. Let's say the date of dissolution deed, the value was 8,50,000. And on the date of transfer, it is 10 lakh. Then this value has to be considered. Right?